3, 2, 1. Hey guys and gals, it's Logan Freeman and
Alex Olson
with another edition of the Kansas City Multifamily Minute. It feels so good to be back here in the hood with you today, Alex, even though I saw you in person early today. How are you doing and how are you feeling, man?
Yeah, it's a great day. Mondays are hot. I usually wake up on Mondays feeling pretty good about the week, excited to get it going.
Yeah.
It's a bit of a rushed week this week with the holiday, but
What holiday is it this week?
we got Thanksgiving.
All right. What are you grateful for?
I'm grateful for my family as always.
Yes. I know you are. You were telling me a little bit about that earlier today, how grateful you were for all of your family. And so
Every single one of them.
Every single one of them. So am I. I'm also grateful for my health. I think it's very important for us all to focus on our health. Just got done running 3 miles. That's why I ran home and no, I didn't physically run home, but I got home and ran 3 miles whenever I got here. I felt good, I wanted to give everybody a little tip. I wrote this down in my journal. Give me 1 sec.
We're waiting. We're standing by.
Yes, stand by. I'll be there in 1 minute.
Well, how are you guys doing today? It's a great day here. You'll probably see this on Tuesday, and we have a lot of product to bring your way. Oh, and here we go. We got Logan's back.
I'm back. So I've been reading a lot of, I've been reading a lot of just like how to stay sane in a hard period of time, right? And one of the things that I think that we have to do is detach from these little mini computers here, right? And so what do you do, Alex, when you wake up first thing in the morning? What do you do?
Oh, unfortunately, I look at my phone first thing.
Everybody does. So, it's usually our alarm, right? So it's like something that we're innately, thinking about a lot. But with that being said, I challenge folks. I was listening to a podcast earlier this weekend, or late last weekend. It was from Perry Marshall, is the book I was reading, 80-20, Detox, Declutter, and D something else. And he was really jacking me up. So I got on the One Thing podcast, which is one of my favorite books, right up there, right next to Essentialism somewhere. Oh, actually, no, it's right by the Bible. That's how important that book is to me.
Nice.
It's literally the Holy Bible, Awaken the Giant Within, and then the One Thing is right there. You can't see it. Yeah. And they were talking about this. They were talking about, doing a 66-day challenge of when you wake up, the first thing that you do is not look at your phone. It is to write down your priorities for the day. And I think that's really interesting. And so I started reading a different book that I just recently received, which is Perry Marshall's book. I have to get this for you. Okay. Because this is too good not to share. Okay, it's this book, right? It's not even a book, right? He's the 80-20 guy, okay? So detox, declutter, to dominate. Okay, so he calls this Renaissance time. This is really interesting. And it seems so simple, but I don't think we do it. And I did it this morning and I was like, whoa. Okay, so 3 action steps here to get your mind right for the day. And this is because it's a Monday and we have a hashtag, thank God, literally, it's Monday. Start your day out without texting, social media, emails, or electronics.
It's tough.
Start your day analog. 20 minutes of free spiritual space with a notebook and a pen. So I use my journal, right? And then this is pretty cool. Read something written before Gutenberg every single day. You know what Gutenberg did?
I invented the printing press.
Yeah, approximately 1450 AD. Anything that we have that still survived the sacking of Rome and the burning of Alexandria, only the really good stuff made it through. Principles, not techniques. Timeless truths that will be just as true 1,000 years from now as they are today. Gutenberg's development of the printing press is considered one of the key events in making the transition from the Middle Ages to the Renaissance. The ideas that Gutenberg's presses distributed led to a complete rebirth of society, a transformation from dogma to experiments, exactly the same transformation that we need today. So pre-Gutenberg publications are the ultimate antidote to social media. If you decide to not do social media until after your workday is done, and if you read something written pre-Gutenberg before your workday begins, you'll be 10 times more poised, centered, peaceful, and confident. So today, I do this on a lot, but I wasn't as intentional about not looking at my phone. So I did not look at my phone this morning, except to read the gospel, pre-Gutenberg, right?
As I say, that, I mean, what besides the Bible, what else you got that would be coherent?
Yeah,
It was pre-Gutenberg.
Stoicism, every single day. So I read The Obstacle is the Way, The Daily Stoic, and The Daily Dad from Ryan Holiday every single day. Marcus Aurelius, Seneca, Epictetus, Cleanthes, all those guys. So pre-Gutenberg, don't look at your phone, get a pen and some paper and write. Okay, I was jacked up this morning, so jacked up that I had to make a post about it. And unfortunately, nobody really liked my post on LinkedIn this morning. I don't know why. I thought it was great. I really did. Did you see it?
No, I didn't see it. I've been, busy with stuff, and I'm not on LinkedIn, 24/7. I can only be on there 7.
Well, you should check out my latest video I put up. It's just hilarious. But anyways, it was talking about what are the 4 deadliest words in the English language. Do you know what they are?
No.
I already know that. Those are the 4 deadliest things. And so just because you've heard the Pareto principle, don't just write it off. Really, really dive into this thing. I thought this was super interesting. 20% of your customers will spend 4 times the amount or the dollar of the average of your other 80%. 4% of the people will spend 16 times your average customer, and 50% of your revenue wants to come from 1% of your customers. And if you don't believe that, why do you think Starbucks sells espresso machines? You ever seen that wall that you have to stand by as you wait? It's because they understand that there is 4% of their people that will spend 16 times the average customer value. So you can buy a $275 espresso machine, or you can buy a $2,700 espresso machine at Starbucks. They have millions of customers per day. How many do you think they sold?
I have no idea.
4%. It's incredible. That's a lot of money. So anyways, I was just jacked up about that this morning. I'm jacked up about the multifamily real estate market. I'm jacked up about Kansas City in general. I'm jacked up that there might be a vaccine to shoot into everybody's arm here pretty soon. I'm just jacked up about a lot of things. Do you want to start talking a little bit about real estate?
Yeah, I mean, of course. I always love talking about real estate.
I don't know if I got taller or my screens got shorter. I'm not really sure. Hold on a sec. My hair just looks better. I don't know.
I think your hair's taller.
Okay. Pent-up demand. We talked about the pent-up demand for real estate last week, right, in the apartment sector. Now there's pent-up demand because Americans are saving, and there's still an affordability crisis. So this year, the world has changed. After a record-setting 2019, Wall Street has been hijacked by the coronavirus, the COVID-19 pandemic, obviously in March of this year. Since February, the Dow has shed as much as 33% at one point. Amidst a transition in the White House, coronavirus cases being the highest they ever have been, and potential new shutdowns, it's back up to over 29,000 pre-pandemic levels. So what does that say to me? COVID-19 has exposed the vulnerability and volatility of the traditional equity markets that people are used to investing in. and they're struggling to stabilize in the face of a major crisis. I don't know about you, Alex, but I have a hard time understanding how the stock market is still as high as it is.
I have no idea.
I mean, I have plenty of equities in the market. Trust me, it's long-term stuff, but like, it just doesn't make sense. So with the recent volatility in the public markets, savvy investors like you are looking for a hedge, a shield, if you will, against the Wall Street uncertainty. Our investment strategy through commercial real estate fills this demand for an alternative investment by providing access to an asset-backed investment class, providing consistent cash flow, long-term appreciation, and a hedge against inflation that is resistant to Wall Street. This is something I've been really, really interested in thinking about. Do you know what intrinsic value means?
In general, yes, but please elaborate.
So in relation to the real estate world, intrinsic value means that something has value outside of what somebody else is willing to pay for it. So when we think about commercial real estate, yes, we trade based off of a net operating income. That's in a cap rate, right? But it still has value because it's paying you on average going up based on inflation, but it's paying you dollars every single month, right? It's tangible. So that's intrinsic value, right? So that's what I mean by intrinsic value. Commercial real estate has intrinsic value. Stocks aren't really paying you. There are some dividend stocks, I suppose, that pay out, decent, I guess, if you're into that kind of thing. But commercial real estate offers intrinsic value separate to what people are willing to pay for. Okay. So with all that being said, it seems that the United States has been moving towards a renter nation. And this year has only highlighted that fact. I was on a commercial real estate panel last week, Friday. Shout out to Tyler Winnett and Tyler and Troy Eckert. Thanks for having me on. And Brian Briscoe, you did a great job, man. Really, really smart guy. If you don't follow Brian Briscoe, you should. He's a good dude. But home ownership has been less and less affordable since the financial crisis of 2008, despite low unemployment and a strong economy up to this point this year. But that's because home prices have outpaced the income growth by more than 2 to 1 on an annual basis. From the period between 2012 to 2017, incomes rose at a higher rate of 2% annually, while home prices rose 5% annually. More recently, for the 9 months ending of March of this year, 14% of all homes purchased were priced at $500K or more. Between April of this year and June of this year, that percentage jumped to 25%. So 25% of the new homes are above $500,000. I don't know about you, but I don't live in a $500,000 house. I think I'm doing okay, I mean, I don't have the Lakeview Terrace like you do, but I'll get there one day. But I do have a 5-bedroom, 5-bath, 4,000 square foot home on a half of an acre. So, I mean, like, that's still not $500,000 here in Kansas City, depending on where you're at. Since the start of COVID-19, home buyer median income is $110,000 compared to $94,000 for a pre-pandemic purchaser. So the percentage of first-time home buyers was just 31% for the year ending 6/20, down from 33% the prior 12 months. So what this means is that affordability problems continue to mount for home buyers, creating even more demand for multifamily housing. Okay? So when people are like, man, who the heck's renting all of these things? It's people that don't want to go buy a $500,000 house, or can't, even 1% of 500,000 is a decent amount. I don't know. That's only what?
50 grand?
Is that 50
no.
grand? No, it's only 5. So maybe if you can get down, you can't leverage usually 99% though, can you? I mean, you have to put 3.5 down. So you're still talking 20 grand,
Mm-hmm.
So long story short, that's who's still renting multifamily houses. Now, from CoStar, love CoStar. They just email me way too much. I wish I could keep up with all of it, but this was interesting that they sent to me. And, I'm sure it just came to me too.
Only you, exclusive.
CoStar, please update the FTW acquisition, the latest acquisition, if you're listening to this, put my quotes in there, please. Thank you. With optimistic vaccine news likely accelerating the timeline compared to prior expectations about when we would have a vaccine, the key now is simply just getting to that point, right? So the bull case for growth over the next 12 months is easy. Let me make it here. The vaccines seem on track to deliver and be widely distributed in the first half of 2021 at some point. Economists are pointing to the enormous amount of household savings to get through the winter. The latest personal income and spending data shows personal savings at over 14% of disposable income. Woo! Woo! That is the highest savings rate since the mid-1970s. Bank deposit data from the Federal Reserve show the same story, with bank deposits, excluding large-time deposits over $100,000, up 25% year over year. In dollars, that comes to 2.7 trillion of new deposits since February of 2020. So
the savings just sitting there, right?
Savings are sitting there. So that's what pent-up demand looks like. Large savings today are going to provide a huge tailwind to the economy once people feel comfortable spending the way that they usually do. There could be a spending boom in this country as we have typically seen in post-war periods, is what CoStar is saying. Now, unfortunately, with the return of 2,000 COVID-related deaths per day in the United States, getting to that point is not going to be easy, but it is on the horizon. The breadth of the recent spikes in the virus is obviously striking and worrisome, as many Americans are getting ready to spend the next week inside of large groups. So, it's going to be an interesting one. What are your Thanksgiving plans? Are you reining it in, or are you doing business as usual?
Well, we're trying to rein it in a little bit and just meet with the immediate close family, maybe 8, 10, 12 of us instead of the normal, 25, 30. So it'll be a little bit tighter group.
Yeah.
Family only, no friends, that kind of stuff. What about you?
Well, we're going back to Jefferson City. It's not going to be as big as usual, like similar to you. But we're going back to Jeff City, and Jeff City is one of the hot spots right now. So we'll probably just go. But I want to go see my grandma, so we are going to go see her.
Good.
Yeah. All right. So with all that being said, last point I want to make: investor confidence continues. If you track month over month investor confidence, and these are the big dogs, okay? Investors were hit with great uncertainty with regards to transactions. Multifamily transactional volume after a robust opening 2 months of 2020 has declined significantly below its 3-year monthly average. However, confidence continues as its increase, with October showing one of the highest increases in deal volume year to date. So that means that investors are starting to feel really good about where the economy is, and that certainty gap that we keep talking about is starting to get a little bit stronger. So that's all to say that I'm excited to see kind of how we finish out this year with everything that's going on, and see where we line up. But those are some pent-up demand, and why people are still renting reasonings. Do you have any thoughts on those?
We see it every day in real life. Here in Kansas City, like you just mentioned, home prices are sky high. Rental prices here in Kansas City are relatively pretty good compared to some markets, and there's a lot of new product coming on board, which you touched on a couple weeks ago.
Yep.
So it's no surprise that multifamily demand is going to continue to go sky high.
Yeah.
And I do think also, as you mentioned, as the big dog investors become more confident, even without that, there's going to be deals in other sectors that people need to keep an eye out for, because deals don't last forever.
Yeah.
And I'm specifically talking about triple net leases, being a cash flow, cash king with low effort on it that people should definitely look into.
Yeah. Excellent. Well, you mentioned over the weekend on LinkedIn that um, you were very proud and excited about the success that we have had through this system the last 4.5 months or so since we've launched this. I think the first one was in July, if
Yeah.
I remember right.
Yep.
Tell me why.
Well, you look at our list, and by our list, I call it the big board. What do we got available that our buyers would be interested in?
Yep.
There's, product out there that's available, but what are the top 10? So we have a top 10 list that we showcase. And when I was looking at that, 9 of the 10 that we have on there are all exclusive to the BRSS system or our listings. And so we have this week, I want to focus on 3 separate deals that really are a good fit for most any investor. And one of those deals is 28 units in Midtown.
Okay.
So you want to be next to the streetcar and or the plaza. Very hot market, 28 units, 19 in one location and then another 9 in another location. This is your absolute standard value add. This property set has been owned in the same family for 30 plus years, and they're going to sell for the right price. And so this is a great opportunity to get into a market that has seen units sell for well over $120,000 a unit. This is going to be considerably less than that.
Okay.
So that's one. Another big property another nice property, I guess, is that the Lawrence. We've got 16 units in Lawrence, Kansas.
Okay.
And Lawrence, Kansas has seen a ton of residential growth. People are moving to Lawrence. People stay in Lawrence after they go to school there. And by the way, it's home to the University of Kansas. And it's kind of a hot little market. It's part of the metro on the outskirts, but it's affordable. It's not like a downtown or a Lee Summit or an Overland Park where it might be a little bit more expensive. 16 units over there where, it's just 4 duplexes that are very easy to rent. And, that's a great property to look into. And then the third one is, which I know you've actually done a lot of activity in, and that's the historic Northeast.
Yeah.
And this is right next to the Kansas City. It's called the Kansas City Museum, which is a relatively new project. And there's a beautiful park that overlooks seemingly half or most of the city. It's 12 units, so 2 sixplexes that have all new furnaces in it, and has done a little bit of work to it over the last year or so. And so that's another set of properties. They're all 2-bedroom, 1 bath, very easy to manage. It's on a restart voucher program. So it's really just a matter of collecting checks and making sure you get the right maintenance crew in there to manage the property. So those 3, you can't get those anywhere else right now.
Premier Properties that's on that right now is absolutely wonderful. Scott Alexander does a really, really good job and has a good relationship with all the voucher programs.
Yeah. So, it's already ready to go. You could take over that one and basically turn the voucher program, which is all set to 1 bedroom. So they're only paying 1 bedroom cost, but there are 2 bedrooms in there. So you migrate that to the 2 bedroom and you increase your rent by $100 and some bucks. And that's all you got to do. And, you can get to a 7% cap rate. So those 3 properties, Midtown, Lawrence, historic Northeast, they're going to be on our big board. They're going to be, the top 2-3 properties listed on our email that, we're very familiar with.
Yeah, don't sleep on the ones that were on there last week either, guys. There's a 62-unit deal over in Olathe, Kansas. That's Johnson County. It's a very unique market of Johnson County. Usually we call Johnson County Joe Code the land of no cash flow, but this is not the case in Olathe. Olathe is the Independence and Blue Springs of Johnson County, right? So I wouldn't
Yep.
quite say Lee Summit. Parts of it are like Lee
Yeah.
Summit. Over on Black Bob and things like that, it's really nice. But yeah, I mean, that's a nice deal. There's some unique facets of that deal. You can go sell 12 single-family homes and get a quick ROI really, really quickly on that deal. So that's one that we want you to take a look at. We also have a listing still, a fourplex out in Lee Summit. That's not under contract yet, is it, Alex?
Not yet.
Okay, we still have that. We have a couple duplexes up in the Northland as well. So those are all really great deals. I mean, that's, Olathe, the 29 units, St. John's Avenue. We've got the fourplex, the two duplexes. That's five deals right there that you should evaluate and take a look at. From all the way from $400,000 all the way up to 2.9 million, right? I mean, there's a good range there, guys. We're coming up on the end of the year. It'd be really good for people to start thinking about if they want to try to get a deal done. We probably can still get one done right now. Next week, probably not. Maybe, I don't know. 30 days would be pretty tough to get something done. But those are all great projects. I'm proud of the BRSS, where it's gone, the way that we've kind of systemized this. We've got a full team behind it. We got people bringing us projects now because of the reach of this. We've transacted multiple deals throughout the year because of this. So stay in tune on the big board. Read the market commentary. It's all really good information. Alex, you have anything else to lead us with?
Nope. Just hopefully everybody gets to spend a great amount of time with their family, limited or not. I think we can all be at least thankful that we're all still alive, and that we're on the right side of the sun.
Well, there you go. You heard it here first from the one, the only, the up-and-comer, the new guy that is changing the shape of commercial real estate, Alex Olson. Man, thank you so much for being here today, and thank you for all of the work that you do on a regular basis, man.
Appreciate it.
Until next time, guys, if you're going to do anything, you might as well go for the win.